Hello everybody, and welcome to this session on climate change and green finance, the dynamics of policy change in the banking industry, which is all a bit of a mouthful, but essentially this is a session on greening the banks. To do the introductions, my name is Robert Schofield. I'm with the EIB, which, just to reinforce the message from this last couple of days, with the European Union's lending arm, and as the EU ambassador to Kenya said this morning, we're increasingly focused on climate issues across the activity that we have across the world. My role for many years was looking after our relationship with the banks in Africa, and hence my chairing of this panel. The three panelists we have today are from a variety of organizations. First off, we have Shiela, who will be known to all of the audience in Nairobi, I'm sure. She's the Deputy Governor of the Central Bank of Kenya and has been since 2015 after a very distinguished career in financial services covering stock exchange, insurance and commercial banking. We also have Teddy Mugabo, who is the Chief Executive Officer of FONERWA, the official Rwandan Green Fund, and she's also a key person in the setting up of a new facility in Rwanda for $100 million to expand investment in green projects across the country. And finally, we have my colleague Daniela Diederich-Ristic from the EIB, who is one of our experts here on climate change and in particular about how it is affecting banks' policies in Africa and indeed elsewhere. So we have three different perspectives, and I hope that will create a very interesting discussion this morning. It's very appropriate, I think, to be talking about greening the banks in the week of COP26 in Glasgow, and I know Teddy has been there this last week. All sorts of announcements were made in Glasgow, including ones by major global institutions about moving trillions of dollars away from fossil fuels into more sustainable activities. At this panel, maybe not on quite that scale, we're aiming to look at the practical implications of these large movements on financial services in East Africa. And regardless of the scale, I think financial services are going to be key in achieving the climate objectives through their investment in infrastructure and lending and other financial support to the private sector. I'm very conscious I'm here sitting in Europe moderating a session about banking and climate change in Africa. So let me start by a couple of quotes from the region. The first from Paul Kagame, the Rwandan president, and this is in fact quoted by Teddy Mugabo's organization. He says, "As we look forward to development, we are not making a choice between environment and prosperity. We are rather looking at how we combine both, because one supports the other." And the second quote comes from Vanessa Nakate, who is a young climate activist from Uganda, whose profile has risen significantly in the last few weeks, as many of the audience may have seen in the lead up to Glasgow. She complains about how Africa is sidelined from discussion, and so how damage to the environment continues, sometimes even in the name of development, despite what Paul Kagame says. She says, "I see my role in climate activism as bringing up conversations that many people have never had, and highlighting the destructive policies and investments of banks, hedge funds, multinational corporations and governments, all of which," she says, "would like the rest of us to have no idea what they're up to. I see my task as drawing attention to communities that people may not have heard of, where lives are being upended and lost on a daily basis." So this is the challenging environment in which we're having the panel. How can banks and other financial institutions take into account the demands of the market and the demands of their customers while rapidly reducing the negative impact on the environment around them? So what I'd like to do is just pick up with the panelists this morning what the objectives are in that environment of each organization. And I'll turn first to the Central Bank of Kenya. Shiela, Deputy Governor. Last month, the Central Bank of Kenya published your guidance to banks on climate-related risk management. Why now, and what were you trying to achieve with the publication of these guidance notes?
Thank you, Robert, for a lovely introduction. And I would also like to thank the Trade and Development Bank for arranging this session, as well as the European Investment Bank, who have done a lot in East Africa. These types of discussion sessions and honesty and openness are very important. And I'm very pleased also to hear about the young Ugandan activist who is coming out very strongly. This kind of pressure, this kind of honesty, this kind of openness is what's necessary for change to happen. I think firstly, what I would say is that Kenya has really been on this journey for quite a long time. And if I just look back in the recent past, in December 2015, the Kenya Banking Association launched Sustainable Finance Initiative. So that was one of the first major steps that was taken. And obviously this was to raise awareness about environmental, social and governance risks to do with the environment. In 2016, the country enacted the Climate Change Act, which was a national climate change action plan, a 5-year plan that started from that time. And I won't go too much into that, but that plan then followed with the ban of plastics and also uplifted the amount of power that is environmentally generated, sustainably generated, which is wind or solar or from 66% up to 88%, and hydro. So Kenya now has 88%. So as I said, this act was an important act. And it's these steps and taking these various pieces and putting them together that achieves the end goal. In March 2018, we launched the Green Bond Program in Kenya. And this was to create an infrastructure that would allow a green bond to be launched and other sustainable products to be launched within the Kenyan environment. And I'm happy to say in 2020, that first corporate bond by Acon Group was actually launched in Kenya and on the London Stock Exchange. So again, there was another step taken. In November 2020, KCB, one of our big banks, was the first to be accredited by the United Nations, the first African bank to be, the first Kenyan bank to be accredited by the United Nations and the Green Climate Fund to access funds for green financing. And finally, in October 2021, as you say, the Central Bank of Kenya has also set out guidance notes on climate-related risk management. Without taking too much time, what the guidance notes does is it asks the banks to now focus strategically, governance-wise, and identify what are their climate risks, and more so, it has a journey on which they will take to disclose to their stakeholders and the general public what they're doing around those climate risks and what is happening as a result. So a way of measuring. So I think Kenya's really been on this journey for a long time. We don't intend to get off this journey. We do understand the importance of the environment and the need to look after the environment, not just for us, but for our children and our children's children. But I would also like to stamp also that those who carry the greatest carbon footprint should also carry the greatest burden. Thank you very much, Robert.
Thank you, Shiela, particularly for that last point about who's going to be responsible for clearing up the mess we've all got ourselves into. Teddy, perhaps I can move on to you at FONERWA. You head the Rwandan Green Fund. And as I said in the intro, you're setting up a new facility with $100 million to finance green investment in Rwanda. Why now? The same question as I asked Shiela before. Where has the stimulus come from to set up this new facility now, and what type of finance are you expecting it to provide? I think we're having problems with Teddy. Maybe I'll be coming back to her in a moment. Perhaps then, Daniela, perhaps I should turn to you then. The same type of question really as to what the conjunction of events has been to mean that EIB has decided to move on and focus very much on climate. It set out a roadmap to get to a position where the activity it finances is more sustainable. Why now, and how do you see it working?
Thank you, Robert, and good morning, everyone. Maybe just briefly before answering the question, I just wanted to re-emphasize the urgency of the climate crisis. I agree with Robert. It's very timely during the COP26 that we have this session. So at the same time that we are discussing here, we have all the world leaders meeting in Glasgow to try to reach an agreement on how to tackle climate change. And indeed, many experts believe that this may be our last chance to get climate change under control. The EU leads the world in its climate ambition. We have the EU climate law, which writes into law the goal to become climate neutral by 2050, which means net zero emissions and resilient to increased extreme weather events. And I mean, of course, for us as the EU bank, against this background, this is very natural for us to be the EU climate bank. And Robert, as you mentioned, as the EU Climate Bank, we have set ourselves ambitious goals. In November 2019, approved by our board, and our Climate Bank roadmap that you mentioned sets out in detail how we will achieve them. So firstly, we have committed to raise EIB annual financing for climate action and environmental sustainability from just over 30% today to more than 50% of our overall business volume by 2025. Secondly, we will be supporting 1 trillion of climate action and environmental sustainability over the next 10 years, which is really believed to be the critical decade, the time frame which we still have to turn things around. And thirdly, we are defining how the EIB group will align all of its activities with the goals and the principles of the Paris Agreement. And you ask me how I see this working. Well, I mean, I can really see that everyone in the bank is incredibly committed to put all our commitments in practice. There are a lot of internal work streams now underway. It's really about the implementation now. And all these work streams are ensuring that we are timely in delivering what we have promised to the world in the context of the Climate Bank roadmap. I want to say that the Climate Bank roadmap is really a process. So it's, in fact, it's a 5-year plan from 2021 to 2025. The Climate Bank roadmap, it's implemented through 10 internal action plans. And these action plans, they are already under development, but of course they will evolve over time. They will evolve in line with the EU policy developments. And they will also evolve alongside the business needs when this is relevant. I just would like to give you some examples of the ongoing work at the moment. So I mentioned our commitment to the Paris Agreement. What this means concretely is that we have developed a very detailed Paris alignment framework for projects, which we are implementing already since the beginning of this year. So it means that we are stopping to finance projects that are not consistent with a low carbon pathway and projects that are not consistent with a climate resilient development. This includes for us no new financing for unabated fossil fuel energy, no airport expansion projects, or new investments in conventional energy intensive plants. We have also just announced our counterparty Paris alignment framework, which defines what type of companies we will continue to work with and under which circumstances. For the banks we work with, this means that we will actually require them to be very transparent We will ask them to disclose against the TCFD, which is the framework to disclose against climate risk. We are also outlining in the Climate Bank Roadmap how we will move forward towards the EU taxonomy for sustainable finance. The EU taxonomy for sustainable finance is a framework to classify what means environmental sustainability, and we use this to classify and track also our finance for climate action and environmental sustainability. And why is this an important element? It's important because it helps ensure that projects are really green, and it avoids greenwashing. And it's important also globally. Global definition and standards, they are really a key to mobilize private investment in support of climate action, as they provide transparency. They provide transparency to investors and to the market. We have also just come forward with a new adaptation plan, which is aiming to increase the resilience of regions that are at increased risk of future climate change. Maybe let me stop here. There are a lot of more details in the Climate Bank Roadmap. It's a public document. It is available on the EIB website and can be downloaded, serve as inspiration. But I would also just emphasize to conclude that the Climate Bank Roadmap also outlines and re-emphasizes our commitment to step up our development finance, especially in Africa, and with the very strong focus, as Robert mentioned before, on climate action and environmental sustainability. Thank you.
Thank you very much, Daniela. And interesting point you're making about disclosure from the banks. That's something perhaps I can come back to the Deputy Governor on in just a moment. But I see that Teddy Mugabo has managed to join us again. And if she is with us, then perhaps, Teddy, I can just turn to you. And I was talking about the Rwandan Green Fund, and just wanted to understand from you where the stimulus came from to set up the new green investment facility that you're trying to put together now, and what type of finance do you expect it to provide?
Thank you very much. Do you hear me all right?
Yeah, we can hear you.
Can you hear
Slightly
me?
distorted,
Okay,
but
perfect.
yes.
Yeah, apologies, having connection problems. But thank you very much, Robert, for the question. But first of all, I'd like to thank Trade Development Bank and European Investment Bank for really giving me the opportunity to be on this panel. Like you mentioned, I think this is a very timely. It's timely to be having this discussion, considering what's happening at COP. Finance is one of the key areas that is being discussed. So I'm very happy to be on this panel. So to answer the question, I think before I even talk about the fund or the facility we're in the process of establishing, it's important to highlight that, Rwanda has prioritized climate change, mainstreaming, and environmental protection across key sector policies. So this goes all the way back in 2012 when, our cabinet approved our green growth strategy, which really sets ambitions up to 2030. And then came the realization that we will not be able to implement this strategy if we don't have, the finance. So finance is an important area, and that's how the fund came to exist. So the Rwanda Green Fund, FONERWA, was established in 2012 by the Rwandan government, and really our mandate is to act as the financing vehicle. To be able to attract climate finance to support, the government strategies of climate change mainstreaming, but also to play the role of coordination, because I think this is one other key, aspect that we have to consider, because when you have different partners involved trying to do different things, it's also important that we coordinate and ensure that, the finance is really going where it's needed. So now, since its establishment, we've only been able to attract grant funding. So far since 2013, we work with several, bilaterals and multilaterals, and we've been able to mobilize over $200 million. And this has been deployed across 45 projects. But recently, Rwanda revised its NDC. So we have a very ambitious NDC target to reduce carbon emissions by 38% by the year 2030. And this has been estimated, well, there's a cost attached to this. We have to mobilize 11 billion be able to achieve this NDC target. So what does this mean? We can't simply continue working through the traditional ways of mobilizing finance through grants. That's where really we started saying, how do we position Rwanda better to access climate finance, move beyond grants, but also really be able to attract private finance. So that's how, the idea of establishing, in the beginning, it was supposed to be a green investment bank. However, after several consultations with key stakeholders, including the Ministry of Finance, Ministry of Environment, and our central bank, there was a thought of why don't we create a facility within existing institutions such as FONERWA and BRD, which is our Development Bank of Rwanda, to build the track record So basically, that is why I have to say that we want to basically position ourselves to really tap into the private capital. And maybe just to highlight what there's three main objectives for this facility, for the Green Investment Facility. The first one is that we want to address local market gaps by using financial. We want to address local market gaps and attract private capital by using financial tools. The second objective, again, I mentioned it, is we want to position Rwanda better to access climate finance beyond grants. And the third objective is to partner with local banks to build their green finance capacity through innovation, risk transfer and deal arrangement. So I'll stop there. But those are the three main objectives. And maybe one last thing is that this facility will be, is being established in partnership. So it's a partnership between two government entities, the Rwandan Green Fund, FONERWA, and the Development Bank of Rwanda. And we'll be using a blended finance approach where we basically blend the grants and the finance. And the whole idea is to de-risk. We believe that the green sector is perceived as risky, but we also want to support our local private sector better. So having this facility that has a project preparatory facility that provides reimbursable grants and supports sort of the ideation and incubation stage, and also helps to prepare and sort of move projects to bankability. So thank you.
Okay, thank you very much, Teddy. That was very helpful. And I was interested in your mentioning that you are going to be partnering the local commercial banks as well. And that leads back to the Central Bank of Kenya, where you mentioned, Shiela, that the banks were facing a number of climate risks and they were going to be asked to disclose those. What do you expect to see from the commercial banks in terms of the risks they face? And if you're able to talk about this, how well do you think Kenyan banks are currently positioned in terms of climate risk?
Thank you very much again, Robert. I think firstly, it's nice to hear from the other two speakers, obviously looking, as you said, from a different perspective. And as we keep talking, we keep educating each other, which is very useful. We started this journey really with our banks in 2015, so it's already 6 years old. And the banks have been looking at where the risks lie in the sense of transition, physical or liability risks. And we know that the impact of these types of risks can result in business disruption, asset destruction, price changes, equity valuations, and being a bit technical now, but forgive me just for a few seconds. And obviously then that leads into credit, market, liquidity, insurance, and operational risks. So I think that's really what we're saying. Do you understand from your client base, from the structure of your company, your institution, your bank, what risks are actually facing your institution? Because obviously banks have different characters. Some may be focused in one area and another focused in another area. And so there has to be clarity on that. And we're saying really this is a strategic issue that should be taken up by the risk structure within the bank. And it's a very serious issue. It needs to be at board level. And obviously from board level to policy level, down to the CEO, down to operational processes and procedures that follow how you monitor, how you manage, how you interpret, how you make decisions around issues that could have climate implications. When you say, how do we then explain what we're doing to the general public and to our stakeholders and our shareholders? And this then goes again to, there's the Financial Stability Board task force came out with a climate-related financial risk disclosures document, which is quite extensive. And I don't think that the banks in Kenya will be able to immediately comply with all aspects of it. But we're on a journey, and we'll have to start taking the steps, and we'll have to start giving timelines around how those steps need to be taken. The easiest part, of course, is to include a statement on climate-related issues in your annual report. And I think that's the one that has already been started. And I think there's some of our banking institutions that are already doing that. Then you have the sustainability report, which is a separate individual standalone report about what your bank is doing, how they're succeeding, what their status is on sustainability. And then you go further to develop this report that was put together by the Financial Stability Board, and a separate climate risk report, and these are the steps that have to be engaged in order for us to really say that we are properly communicating the climate identification risks, the climate monitoring, oversight and management, and the success or failure that is coming out of that. So I think it's a journey, and I think those people who believe that it's a light switch you can switch on and off are not going to succeed. I think it's those people that are prepared and focused and dedicated to take the necessary steps that in the end will find that they have achieved. Thank you very much.
Thank you very much, Deputy Governor. Perhaps I can just pick up one of the points you were just alluding to there in terms of it being on a journey. How do you expect to work with the banks as they face some difficult decisions as to whether they continue to support particular sectors, or whether they, as Daniela set out in terms of what EIB is doing, as they prepare to withdraw from those sectors where they may have existing business lines and doing very nicely? Thank you very much.
The Kenyan banking sector, we've enacted various charters. I'm trying to find where I've got it with clarity. 1 minute. But a banking charter that really deals with 4 critical things that we need from our banks. 1 is they must be customer-centric. 2 is they must have ethics. They must be based on an ethics platform. 3 is that they must focus on risk. And 4 is that they must be transparent. So I think the climate discussion covers all of those. So the bank charters they are a document that we review continuously with institutions. Let me also say that Kenya, to some extent, will have less pressure than maybe countries that are reliant on mining or coal extraction or fuel extraction, because we have a very diversified economy. So, and we're not really focused on those industries. So it makes it easier. But on the other hand, the impact of climate change makes it more difficult. At the moment, we're going from what we think could be dry weather conditions into what could turn into drought conditions. And what does that mean? We've already experienced in Kenya in the last 2 years some unusual activity among our lakes. And so there's been flooding in areas where there was no water. And the lakes, the level of the lakes has risen significantly. So those are the types of issues now that will be affecting the banks significantly. You're talking about the agricultural sector, you're talking about infrastructure, you're talking about social structures. So I think it's, and that's why I really believe that with many of these problems, listening, learning, and acting is very important. I think coming out of the COVID era, we have learnt a lot about that. And maybe as we deal with the environmental issues, we can use some of the learnings that we've taken from COVID. Thank you.
Thank you. Yes. Perhaps, Daniela, I can pick that up with you in terms of Kenyan banks preparing themselves not just to face the physical risk and the social issues which Shiela has just alluded to, but also to organize themselves so that they can report on climate risk and understand and take action as required. What can EIB bring to the commercial banks to allow them to get up that learning curve?
Yeah, thank you. And I just really want to also congratulate the Deputy Governor for these really important actions that are being taken. And it also shows that there are very high expectations now to the banks. And we, I mean, of course, we have the global development mandate, and all the financing that we are providing will have this very strong climate and environmental sustainability focus. But just the funding is not enough. So what is more important, and we have seen actually a question here from the audience, is the capacity building, the skills and the training for the banks that are wishing to develop its climate action ambitions and to live up to the expectations. We have just this year put in place a very comprehensive advisory program for banks. We are already implementing this with several EU banks alongside with what we call the Green Gateway umbrella. So this advisory offer, it has two components. It has on the one hand the web portal, which is available to everyone who's interested. It's on the eib.org website, and it includes online-based support tools, guidance materials, tools to help check with robust criteria on what can be considered as green. But it also includes tailored bilateral advisory support in the form of technical assistance. We are currently in the process of adjusting this offer and make this available also for the African banking sector. And what we can offer, it depends very much on the needs, because every bank is different. Every bank has a different level of capacity. They're operating in different markets with different customer groups. So the support that we can offer through this, it includes support to develop climate strategies, to develop appropriate climate risk management systems. But it can also help them look into the financing opportunities, to develop themselves a robust way of identifying the right types of investment and adjust their internal processes, systems, and procedures accordingly. Because one thing is to have the policy, but then the other area is to implement and operationalize this. Having said that, of course, we are ready to offer our expertise, but I also wanted to stress that we will not be able to reach our targets without the help and the strong involvement of the banking sector. There's one important market segment that we can only reach through the banks, and this is the micro, small, and medium-sized enterprises. And this is a market segment which really has significant capacity to contribute to tackling climate change through green growth.
Okay, thank you very much, Daniela. Perhaps today I can pick up this point about what's been happening in commercial banks. You said in your contribution that you were going to be partnering with the commercial banks in Rwanda. Just wondered how you expect the new green investment facility in Rwanda to affect the lending policies and climate policies of the commercial banks. What would you expect to see as a success? Teddy, can you hear me? I think you're possibly still on mute.
Yes, now I'm muted. No, thank you, Robert. Before I answer the question you just asked, I think it would be important to, can you hear me?
Yeah, we can hear you well, thank you.
Hello. Okay, thank you. So I first want to highlight the challenges that exist in our financial sector. So the financial sector in Rwanda is pretty small, despite being increasingly diversified. You find that banks, first of all, commercial banks provide finance for traditional sectors. So the green sector is one that they still perceive as risky. Something else to highlight is that currently there's only provision for short-term financing needs, and there's strict requirements, but also the interest rates are very high, so relative to the needs of the green project. So before we even designed or looked at how the green investment facility should really operate, it was first of all important to conduct a market assessment and understand what are the needs, what are the challenges, both on the side of the banks, but also on the side of the developers, of the private sector players. So that's why we believe that having this investment facility with two windows, the first window, which is the project preparatory facility, is really focusing on supporting the developers in ensuring that, first of all, their projects reach bankability. So that's one aspect, really to provide technical assistance to improve, the pipeline of projects, but also in some instances provide, some proof of concept support, whether it's grant funding to do feasibility studies and really help these projects move move to bankability. Now, when it comes to the banks, the commercial banks, we also believe that one, there is to be this capacity building really around the green finance, because like I mentioned, it's an area that is new, that not necessarily all the commercial banks understand. But within the facility, we also want to provide tailored financial products, so such as subordinated debts and senior debts, and also, really ensure that there is long-term financing provided, as well as lower the interest rates. So those are some of, if I can want to see as a result of the establishment of the facility, is to really make sure that we provide these tailored financing products and make the environment more conducive as compared to now. So it is, at the moment, obviously the investment facility is only under operationalization, but we're seeing a lot of interest from different players. And like I mentioned already, this is being implemented in partnership with the Development Bank of Rwanda. And so we believe that the next step is also to bring the commercial banks on board. And so, thank you.
Thank you very much, Teddy. I see that time is nearly up. And so perhaps I can just cover, to summarize some of the issues that we've been talking about this morning, which I hope have been very interesting to the audience as well. I think the first point, which is heartening, is just how seriously people are taking the issue of climate in the financial sector across the region. We've heard from Rwanda and Kenya in particular. And if Vanessa Nakate were listening to this session, and I did invite her, but I'm not sure that she would be, she may be still walking in the rain in Glasgow, I think she would be impressed by how seriously people are beginning to take this issue, even if, as the Deputy Governor mentioned, it's not a question of flicking a switch. And there's clearly got to be a learning curve that all of us are going up. So Daniela was talking about what EIB's roadmap looks like and how we have allowed it to mature over a period of time. It's been a very difficult task within EIB. And I'm sure that the commercial banks in both Kenya and Rwanda will be facing exactly the same issues as they grapple with some of the difficult tasks and difficult challenges of deciding what they will continue to finance and what they may have to decline in the future. But the other particular point I think that comes out of this discussion is how this has to be done in public. Vanessa claims that banks don't want people to know what we're up to. I think increasingly in terms of climate, we are all and we're all here from public sector organisations on the panel, we are all going to be doing this in the full glare of publicity and limelight. And I think in that situation, the honesty in which we face the challenges that are ahead of us is going to be a very key part of whether we succeed. But as the Deputy Governor has just pointed out, in terms of the physical challenges that countries face in East Africa, we can't afford not to succeed. So may I thank all three of my panelists for their very interesting contributions this morning, and I hope the audience found the conversation as interesting as I did. It's the beginning of the conversation, it's certainly not the end. Thank you very much.